So one of the mistakes I see a lot of traders and investors out there making is a lot of people are trying to time the market. A lot of people are trying to pick and choose when they should be in and out of the game. And that's never the way to think about either active trading or passive investing. You always want your money at work. You always want to be playing the game. If you're standing on the sidelines, if you pull yourself out of the game, guess what? You're not really making any money. In fact, you're actually losing money when you think about it in terms of opportunity costs. And I see a lot of people, especially when there's turbulent times in the market, you have really high volatility periods, maybe the market is going through a bit of a correction, and all of a sudden people just start taking all their money off the table. And a lot of people are like, maybe I should just stay on the sidelines for the next couple of weeks, next few months, maybe even the next year, because I think 2025 may actually be a bearish year. Maybe I should just pull all my money out of the market and just sit on the sidelines. That is a horrible mistake. That is, you're never going to succeed as either a trader or an investor if you're trying to time this sort of thing. What you need to be doing is you need to be in the game at all times. So as a trader or an investor, the way you need to think about this is you always want your money to be working for you. You always want money at work generating you more money. So think of it in terms of P&L per day. So let me switch over to my trading platform. Of course, I use TASTYTRADE as my trading platform, and I just ran a quick back test. I did a back test on the SPY over the last 5 years. I sold a 10 delta put at the 60 DTE mark every week in SPY for the last 5 years. This is a very popular, successful kind of strategy. Short puts in SPY, they just kind of work. And because I was doing the 10 delta put at 60 DTE, I had a 96% win rate, right? We took 224 trades. I won 215 of them. And I was telling you earlier, think of, the money you have at work. Imagine this is a strategy you employ all the time. And I average on this trade here, I have an average profit of $76 per trade, right? If we wanted a per day amount, you could divide the average number of days of the trade by your average profit. I guess your average days in the trade is only 18 days per trade. But whatever the number is, if we do average per day or average per trade, you can see I make $76 every time I take one of these trades on average. So why would I ever want to pull myself out of this trade? Why would I ever, for whatever reason, think, well, the market doesn't look good today. Maybe I shouldn't sell my usual short put in SPY this week or this month, whatever kind of time frame you're running these on. I'm trying to time things, right? I'm trying to predict things at that point. And that's not what you do. You can actually see this back test. This back test wasn't trying to predict anything. It just did the same thing over and over and over again for 5 years, and you can see the results. The results speak for themselves. So why in the hell are you, if you're a trader, why are you trying to play this guessing game with the market? Yeah, again, you want your money to be at work. You can see you make money per day or per trade on these things like short puts and SPY, short put credit spreads and SPY, whatever it is you're doing. If you have some kind of strategy that has positive expectancy, you passive investors, you guys know you can sit on certain ETFs, index ETFs, dividend paying ETFs, growth stock ETFs, and you're practically guaranteed to make money in the long run. Would you ever want to passively invest by, for example, buying a bunch of shares of SPY, but then on occasion, I'm just going to sell all my shares of SPY and get out of the game for a while. I'll get back in when I think, times are better. No, you are practically guaranteeing yourself a loss. Even if you don't necessarily lose money, what you're doing is you are losing on the opportunity cost, because most of the time, had you stayed in the game, you would have made, for example, on these short puts, that average $76 profit per trade. But you only get that if you're playing the game. Now, I'm not telling you guys to go and, put a whole bunch of money at risk all the time. We certainly all kind of adjust our buying power usage, depending on how much risk is in the market. Certainly there are times where I'll pull a little bit more of my money off the table, and other times I'll put a little bit more on the table, but I never get too crazy with it. I always have a substantial portion of my net lick account value at work. I'm never going to, for example, be using less than, say, 30% of my buying power at any one time, because if I'm below 30% of my buying power, I'm just not using enough of my money. And then, I never try to get more than about 50 or 60% of my buying power at use ever, just, for safety reasons. But, that 30% to 60% range is kind of where I like to hang out. And if for some reason I creep below 30%, I need to have a damn good reason why my money is not working for me, because again, that's money that I'm losing. If my money is not in play, I'm actually losing money when you think about that opportunity cost. So let's imagine you have this option strategy that has positive expectancy. Let's imagine that you're trading a strategy that has a $5 per day P&L. So you expect to average $5 of profit per day per trade on this strategy. So it's going to make money for you if you just do the thing over and over and over again, as long as you're in the game. But what happens when you take all of your money out of the game and you're just sitting in cash? What's your profit per day on your trades if you're sitting entirely in cash? Well, your profit per day is zero, right? You have no profit. And that's that opportunity cost. That's the loss that you're losing, where again, if you were actually taking trades that had positive expectancy, you're guaranteeing yourself to make money in the long run. So never, ever. It's like, let's imagine you play a game, an actual game, a sporting game, maybe basketball is kind of an international sport. Everybody's probably played basketball at one time or another. And let's imagine it's just you versus somebody else one-on-one in a game. Would you ever just take yourself off the court for a little while and, let the other guy keep playing? He can keep shooting, but you're not defending him at all. You're just going to walk off the court and just let him do whatever. Does that seem like a winning strategy for you in the long run? No, you're practically guaranteed to lose that game. That's what you're doing when you sit around and you're trying to wait to get into the market. Never sit around and wait to get into anything. You never want to start forcing a lot of bad trades, but at the same time, if you're one of those people that are just sitting around and you can't find anything to trade, then you're a little bit too scared, right? And it's one of those things, you can't be too scared. You have to take some chances. In order to make any kind of reward in anything in life, you have to be willing to take some risk. Occasionally, I'll see newer traders especially, they look for the perfect trade because they start learning about things like options, for example, and they know, hey, I need a liquid stock. I need something with high IV if I'm selling options. I need check the IV index. I want to check my risk versus reward. So how much credit am I getting? What's the buying power reduction? And, they have all of these numbers and they want the perfect number. They want really high IV. They want a really high risk reward and return on capital. They want the perfect trade. And guess what? You rarely ever find a trade that's just like the perfect thing ever, right? Usually things are less than perfect. Usually things are pretty good. Those are the trades you find that you end up getting into, right? And the things that are less than pretty good, typically you just avoid altogether. Again, you never want to force a bad trade, but if you're sitting around waiting on the absolute perfect trade to take, you're never going to trade. So please don't be so picky with your trading that you have little or no money at risk, because in the end, that's just losing you money. Now, before I go, I do want to mention, check out my book, The Super Wheel Option Strategy, available over on Amazon. This book is about my favorite option strategy, which of course is the wheel option strategy. Again, you'll find a link to the book in the description below. Also, if you want to help support this channel, please subscribe to the DT Options Discord server. I hold a live voice chat there each and every trading day. We get together, talk about what the markets are doing. I get to share my trading platform. You guys get to see all the opening and closing trades I make in the morning. We have a nice little trading community over there, and we'd love to have you. Peace, guys.